Welcome back to Basic Business Training Part 2. And again, we are happy that you are with us for this session. And in this session and the next few sessions, we are going to be digging deep into money management and how to organize our records to make good decisions, to know how we are being blessed to be a blessing, and to organize those things in a way that allow us to see flourishing and growth for the business. In this session, we will be doing a little bit of review of some of the things that you learned in Basic Business Training Part 1. And so if you hear some things that you heard then, that's good. We need to have that reinforcement to remind us of some best practices as we continue to build that capacity to go a little bit deeper, a little bit more complex, hopefully because your business has grown since you've taken the first course. That is our prayer and our hope. So you are welcome, and what we want to do is look at a few passages that we believe speak about money. There are many passages throughout Scripture that speak about money, and we know that money is something that God cares about because of how much it impacts our lives. And His desire for us is to use the wealth that He has given in a way to glorify Him. And Deuteronomy 8, verse 18 reminds us that don't forget who it is that gives you the ability to create that wealth. That is part of the covenant that God has given. He desires for people to enjoy the work of our hands and to enjoy the things that we get from that. But we need to remember that it is God who gives that ability. Proverbs 13, verse 11 says, "Dishonest money dwindles away, but he who gathers money little by little makes it grow." And that sometimes it's difficult for us to see slow progress, and yet progress as we earn more money and it comes slowly by slowly, we are able to manage it better and take good care of it as well. Proverbs 11 verse 1 says, "A false balance is an abomination to the Lord, but a just weight is His delight." And I think sometimes we have these false weights because we are trying to survive. We are trying to justify our behavior. I remember living in a place that was just emerging from civil war, and people were struggling to survive, and we would go to the market to buy a cup of rice, and what we didn't realize is that there was melted candle wax at the bottom of that cup, which you can't see, and so you would think you're getting a full cup, but you're actually getting less than that. And I remember thinking that the women who were selling at the marketplace in this way were justifying their behavior because they were trying to feed their children, trying to feed their family, trying to get a little bit more. And so when we read this text and we hear that a false weight is an abomination to the Lord, that's a very strong word. And we need to take seriously that if we trust in the Lord, we can do the right thing, we can do the ethical thing, and believe that God will provide for us as well. One of my favorite texts is Proverbs 30, verses 8 and 9, which says, "Keep falsehood and lies far from me. Give me neither poverty nor riches, but give me only my daily bread. For if I grow rich, I may become content without God. And if I am too poor, I may steal and thus insult God's holy name." And so we're being encouraged in this place to pray for just enough. Most of us can't handle the temptation of having a lot. When we have a lot, we do. We forget that we need God. We forget that it is God who gives us the ability. We become reliant on ourselves, and we move away from who God is. But we also understand, as with the women I was talking about just a few minutes ago who are selling the rice, if we are too poor, we may steal and insult God's holy name. And so I hope that your prayer is that God would give you just enough so that you can flourish and you can help other people to flourish. If God has blessed you and you have a lot, remember, to whom much is given, much is also required. And for those of you who are struggling, we continue to pray with you that God will strengthen your hand and what you have in it, and that your business will grow so that you also will not feel that pressure of stealing. Matthew 6:24 reminds us that no one can serve two masters, for either he will hate the one and love the other, or he will be devoted to one and despise the other. You cannot serve both God and money. And I think that's the challenge. As Christians, we are found in all parts of the marketplace, in every sector and in every industry. And yet sometimes we forget that we are ambassadors and saints and priests in those places. And so we take off our sacred hat when we leave the church building, and we believe we put on a secular hat in order to survive. And so we do things that do not line up with who God is. And in those cases, we are serving man, we are serving money, we are choosing to turn our back on God and then remembering him when we go back to the church building. And so we are being reminded here that we can't serve two masters. We have to make a decision. Either in our workplace we do it as an act of worship, or we do it in terms of seeking for ourselves, and that is not the healthy way. That is not the biblical way for us to go about our work. And so all these challenges mean that we have to be accountable. We have to be transparent. We have to have integrity. And bookkeeping is the way in which we do that. What does it mean to do money management God's way? How do we keep good records in order to be accountable and to use what he has given us for his purpose? What does it mean to not do money management God's way? What does that look like as we go about doing this work? And what are the temptations that you face, that the person sitting beside you face, that the person in the marketplace next to you faces in terms of how they manage their money? A survey was done by a sales and marketing journal, and they found that 58% of employees cheat on expense reports. That means that we are asking for a reimbursement, or we are claiming an expense that either was inflated or that didn't necessarily happen. 58% is a very high number. 50% of employees work a second job on company time. And so that, again, that's a very high number where you are supposed to be committing your time to the place that you are working, and you're stealing from them because some of your time is being used for something else and some other work that you are doing. And that, again, has an impact on our integrity, our ethics, and it ultimately has an impact on the bottom line of the business where you are serving. 19% give a kickback to customers. That means you are giving money back. You are, in a sense, bribing customers to buy from you. And that is not good for the business. It is maybe good for you, and it is maybe good for the customer, but not necessarily for the business. And so when we are talking about doing money management, we are back to looking at the roof, at the structure of our business and putting a roof on. And in Basic Business Training 1, we talked about the roof being kind of a thatch roof. We're doing a cash journal, and a thatch roof is better than no roof, but we all know that with a thatch roof, there are still things that can enter in. There is not full protection. And so in the next few sessions, we are going to be encouraging you to go from the thatch roof to the iron sheets, and to hopefully from the iron sheets to the tile, where you can feel very secure that no rain is going to enter in, that the sun is going to be, the heat is going to be kept off your products, that there will be a good temperature for you so that you can work well and your business will be able to flourish. And so that is the part of the structure of the business that we are on right now. If I were to ask you how many of you believe that record keeping is important, that bookkeeping is important, I believe that all of you would raise your hands. And yet the second question that follows up very closely to that is how many of us are doing it, and many of us would not raise our hands. And there are some good reasons for that. There are most of us, if we love bookkeeping, if we love numbers, we go into accounting. But if we don't love numbers, if we don't love math, we just try to get by with what we can get away with. We love the business we're doing, but we don't want to do the record keeping. And so we have to look at the reasons for why it's important. We have to understand the why before we can move on to the how. Again, we can talk about how to do record keeping, and there are many classes that you can take, and there's many people that you can learn from, and the internet is full of people who will teach you how to do record keeping. But if you have not accepted the why it's important, it doesn't matter how much you hear about the how, you will not do it. You have to have a full conviction that this is important for you and for your business, with God as the owner and you as the manager, in order for you to take on this work that doesn't always feel great, that doesn't always feel comfortable. So what prevents people from keeping records? There are many different things that can prevent us from keeping records. For some of us, we are just too busy. We have used that as an excuse, and it's not a priority, essentially. That's what it means when we say we are too busy. It's not a priority for us. Some of us just simply don't know how to do it, and that's another reason. It feels intimidating, and it doesn't feel natural to us. But record keeping, we have to understand, is not an end in and of itself. And that is one of the things that I have seen. There are people that begin to believe that keeping a cash journal is important, what you learned in Basic Business Training 1. And that's great. You start keeping that cash journal. But that is not the end result. And I hope that you have taken those and you are interpreting what is happening. And in these next sessions, we are going to be working on that, how to generate reports from the cash journal so that you can make good strategic decisions for your business. In the end, bookkeeping is to help you as the manager or the owner of the business to understand what is happening so that you can guide the business on this roadmap. Remember, we talked about our goal here is to develop a business plan, and part of the business plan is, or the purpose of the business plan is to provide a roadmap for your business. Where is your destination? How are you going to get there? What are the things that you will encounter on the way, and how do you work within those things? And so record keeping is one of those things we do to help us to reach the destination that we have set. But it's not the end in and of itself. The end is the destination, the growth that we want to see. Record keeping is a way in which we can make good decisions. The end that we are working on is improving operations and the profitability of the business. Records will help you, of course, understand what is coming in and what is going out. And to put it very simply, that's one of the things that we are wanting to monitor. What's coming in, what's going out, what are the patterns that we see in that? Your records will enable you to analyze past business performance and to make changes to improve your future performance. And of course, they serve as a historical account of your business, and they can be used for future reference. And for many, and in terms of legal and regulatory and government, it allows for that fiscal accountability so that we can report what is actually happening. It allows you to monitor and evaluate whether you're making money or losing money. Helps you to track your employees' progress as well and help them, keep them and yourself honest. And that's one of the things that are so important. We talk about internal controls, and every business and every organization, every church should have something called internal controls. And those are the policies of how we handle money, how we handle assets. When you don't have that, maybe you think if you have that, you are communicating mistrust. But when you don't have that, you are actually opening up the potential for people to be tempted to do things that are not good for them, good for you, for the business, are good for God in terms of being witnesses. And so this is one of the things that we do. The way we set up policies for record keeping is to help protect you, to protect those who are working with you, to protect the reputation of the business. And as Christians who are to bring light into darkness, we are to protect God's reputation as well. Some of the businesses that we work with have a sign in their business that says, God is the owner, I am the manager. And that's a beautiful thing to have. But if we don't live that way, if we don't work it out, we end up causing a problem for God's reputation. And so we have to do everything we can to protect that. If you don't keep records, you are not going to be able to measure your business's progress. If you can't measure progress, you won't be able to manage that progress. And if you can't manage your business properly, it won't succeed. And so this is one more tool that really shouldn't be an option. It shouldn't be something that you say, I know everything going on with my business. I don't really need to measure. But it's something that if you want your business to grow and if you want to understand it, this is a discipline that has to be developed. Records will help you answer the questions of which of your products are most popular. What are the expenses associated with the goods that I sell? And so often when we sell goods, we know what it costs us to generate or to make that product. We understand the cost of what the customer is taking with them. But too often we do not know all the costs that are associated with the goods because we forget about some of those annual costs, those fees that we have to pay. And so we are not actually covering the costs until we sit down and do the math. It can also help you know if you've earned more money this year than last year, or this month than last month, or this particular month to last year in the same month. And one of the things I always like to look at is to compare year to year and month to month to see what type of trends there are. Partly because it helps me to be more content. As I look at the numbers and I can see that June is a really tough month for whatever reason. And then I look back at the previous years and I say, well, there's a trend there. June is a tough month every year, and so I can take some comfort that I'm not in trouble this June. We've recovered because July ends up being a much better month. Having that information and having somebody help you to put that together, if you don't do it for yourself, is really something that can bring you contentment. It can bring you peace. And one of the things I should say is, as we go through these next sessions, we're not trying to make an accountant out of you. There's a difference between being a manager and having an understanding of the financial records and being the one to put those financial records together. We believe it's very important that everybody has an understanding of how to do it and that you practice it. But if you find that this is something you can't do, you may need to ask somebody to help you out with that. And it will be worth the money. It will be worth the investment for you to have somebody look at this, help you put the records together once a month or once every 2 weeks, or however you want to do that, however you can manage that. And so we are not trying to make an accountant out of you, but we do want you to be able to be a good manager for even the records that are being presented to you. There are two primary excuses, as I have said, that people use for not doing records. And the one is that my business is so small that I know everything that is going on. And, of course, that can be a false assumption. When I help people with their budgets and I ask them, how much money do you spend on food in a month? They always do it much lower than what the actual is. And when they begin tracking their expenses, they're very surprised to see how much money is going to this or to that. And the same is true when we sit down with a business and we begin to work through their expenses. We do have some assumptions of what we are doing with the money, but until we start tracking, there are always leaks. And again, if you want to increase your profit, and I know that you do, one of the easiest ways is to reduce your costs. But if you don't know what your costs are, it will be very difficult to begin cutting those expenses that are spending your money, leaking your money out without keeping good track of it. And the other one, of course, is being too busy. And so our encouragement is that you make it a priority, that you say, I am going to work smarter and not harder. I am going to take the time and I'm going to make it a priority every day at the end of the day to take 30 minutes to go through what happened for that day and make some summary notes or organize the papers so that they can be found easily. And then at the end of the week, or however you want to organize yourself, you have a longer period of time where you begin to look at what those records, every day those records are telling you as the owner. Remember, God has entrusted this into your care, and He has given it to you. You've been blessed in order to be a blessing, and the way you are a blessing is by helping that grow, and the way you help it grow is being aware of everything that is going on in that business. And so the financial planning process, we say, is actually very simple. The financial planning process is 3 key words, and it is plan, do, review. And I would ask you to repeat that out loud wherever you are. Plan, do, review. And that's very important. And sometimes we spend some time planning. And planning is making the budgets. And every business needs a budget. Every organization, every church, every family needs a budget. And a budget, as we spoke about in Basic Business Training 1, a budget is where you are making, from the best of your understanding, some projections of how much money will go into the different expenses that you will be incurring over the next month. We would encourage you to have a budget for the whole year, but then you break it down month by month. And what you want to do is to make some assumptions about how much income will come in. And of course, some of that can come from previous years, but if you're starting completely today, tomorrow is the first day, that's okay. You can begin to just guess and then refine that as you go through it. And so the planning is setting a budget. It is saying that I believe in this next month or in this next year, we will spend X amount on our office supplies. and what our office needs in order to run. Now, maybe we are in the business of doing tailoring, and so we have a few different sewing machines and people are sewing, but our office still needs supplies in order for it to run. We need receipt books, we need ledgers to be able to record things, we need cleaning supplies to keep the place clean. All those things are part of the office supplies. So you can begin to think about how much might I need in this next month and in this next year, and that becomes part of your budget. Another thing, of course, is how much inventory you might need, or all the other costs that we have listed out on that budget for you to look at to design for your business. And so the planning part is to sit down and to say, what are we going to need? And again, if you have no idea, and it's even difficult for you to guess, starting tomorrow, begin tracking all the expenses. Keep a notebook in your pocket. Anytime money leaves the business, you write it down and you find a ledger that you can record it in. And if you have to take it with you when you're on the road to write it down, you transfer it back when you get back. That's the 30 minutes that you spend at the end of every day. And so once you do that for 30 days, then you'll be able to see, I spent this much on transportation, and I spent this much on food for the staff, and I spent this much on utilities, and so on. Once you have made your plan, once you have made your budget, now you go from plan to do. And now you begin to live that out. And so as a business, if we have said we are going to spend this much on office supplies, and we get to 3 weeks in the month and we realize that we have run out of that money already, then we have to make a decision, because we've been tracking it, right? We've been watching how much we're spending in this. We have to make a decision. Did we spend too much, or did we not have the right amount of money in the budget? And that actually now takes us from the doing to the reviewing. So we go plan, do, and review. Without the reviewing, you will not know whether you had a problem. And so in the reviewing process, we have to assess, was there a challenge that explains it, so we don't really have to change anything? Was the budget incorrect, or was the spending incorrect? And what you do after you review is you go back to the plan again and you make any modifications that need to be made in order for you to continue going forward. And so the doing is something that we recommend that you do every day for 30 minutes or so, and just make it part of your habit that at the end of the day, or maybe an hour before you close down, whatever it is, that you take that 30 minutes to begin looking at the financials for that day. But the reviewing and then the planning happens when you sit by yourself or with your key leaders, if you have those, for an hour or two, and you really try to interpret what happened this week, why did it happen, what did we love about it, what was a challenge in it, what do we need to change for the next time. And so plan, do, review. Please don't plan and do and then forget to review. And that's something that we see a lot. There's a lot of people that don't do plan or review, they're just doing. And if you're not keeping records, that's what you're doing. You are money's coming in, money's going out, but you really can't speak or say where that money is coming in from, where it's going, with any real integrity at least, because you don't have any proof of what's happening with it. As we go deeper into this particular session and into money management, we want to look at the difference between bookkeeping and accounting. And it's an important difference because of how you as the manager fit into that. And so we'll define bookkeeping first. Bookkeeping is a subset of accounting. Bookkeeping refers to the process of accumulating, organizing, storing, and accessing the financial information base of an entity, which is needed for two purposes: facilitating the day-to-day operations of the business, and then preparing the financial statements, tax returns, internal reports to the manager. And so the bookkeeper is essentially collecting the data and helping to organize it, and then presenting that, preparing the reports for the managers. And so bookkeeping or record keeping is the financial information infrastructure of your business. as a manager or as an owner, remember we say God is the owner, you are the manager. As the manager of the business, you need to help to set up that structure. What is the bookkeeper going to be doing? What is the way that money will be tracked in and out? Maybe you don't love math and you don't have to necessarily to help set up the system, but you need to be part of that system to make sure that it is doing everything that it needs to do. The financial information base should be complete, accurate, and timely. And timeliness is very important. Every record-keeping system needs quality controls built into it, which I referred to earlier. Those are those internal controls. So usually the person who is receiving the money is not also the person who is recording the money. The person recording the money is not always the same person as the person who deposits the money. You need to have checks and balances to make sure that people are being protected from temptation. And so often the person who is writing the checks, if you use checks in your business, again, is not the person who is the bookkeeper, because the temptation is there that we could write a check for something that is not okay, or we could change the amounts. There needs to be paperwork that goes with any check request so that it is told what it is, that the invoice for what it is going to be used for. There's a lot that goes into internal controls, and setting up your record-keeping and bookkeeping system is a very important process, and you need to be a part of that as the manager. Accounting, then, is a much broader term than bookkeeping. Remember, we said that bookkeeping is essentially a subset of the whole accounting process. So the accountant, if you have an accountant, is going to help to set up the bookkeeping system, including the controls to make sure that everything is working well, and then analyzing and verifying the recorded information. Usually accountants give orders and bookkeepers follow them. Accountants design the internal controls for the bookkeeper system, and they are relied upon to detect and deter theft, embezzlement, fraud, and dishonest behavior of all kinds. Of course, very interestingly, most embezzlement and dishonest behavior can be found in the accounting department, in the accounting systems. And so when you look at statistics of who are the ones mostly involved in embezzlement and in dishonesty as it relates to money, it's going to be people in the accounting department. And yet they are the ones that are setting up the system. And so we need them to help set up the system, but they need us as well to monitor that system, to have oversight. As they often say, the buck stops here, that you as the owner or the manager, you cannot say that they set up the system and I trusted them. You have to get involved. You have to understand what's happening, and you need to do your own internal audits at times in order to know what's happening. And of course, I'm talking to those of you who have businesses where you are having somebody who is helping you with the bookkeeping. And one of the things I've done with small businesses, when I look at their ledgers and I see a check maybe that was written, I will ask for the supporting documents just to see what they are having there. And that's kind of an internal audit. We all know what big audits are, and we don't love those. But to be able to hold your people accountable to say, you know what, let me see this, and just randomly do it. Randomly ask for a specific financial transaction and how that transaction went. If you remove yourself from that, if you are afraid of numbers, if you say, I just trust them, you are actually leaving them to some temptation. And so you have to immerse yourself and get involved in that as you are able to. Accountants tend to trust the system more than the people. Accountants set up the system. If you know accountants, we often say they are a certain type of personality that they love the system. They love how it can all work, and it can be a beautiful thing. Accounts prepare reports based on the information accumulated by the bookkeeping process. And so they look at the financial statements, the tax returns, and other reports that are being created. But having audits, having both internal and external audits, and having a good system is ultimately all about good stewardship. God has entrusted you. You have been blessed to be a blessing. And you have a responsibility before the owner to provide good reports to show what it is that you are doing with that. If we think about the parable of the talents, of course, the master comes back and those with the talents have to present what they did. And sometimes we don't see that as visually. We don't understand that because God doesn't show up on a Saturday morning or at the end of the month or the end of a quarter and say, let me see your financial reports. And yet ultimately, if God is the owner, that is who we should be doing these reports for, and understanding that God may not show up in person at the end of the month, but in my mind, he is showing up in person because he is the owner and I have a responsibility. So stewardship is an ethic that embodies responsible planning and managing of those resources, and we want to do that remembering that this is how we honor the God who has blessed us to be a blessing. We tend to think often about management of resources when we think of bookkeeping, and we have to remember that planning is an important part of that. And so again, we want to repeat: plan, do, review. I want us to look at the difference between financial accounting and management accounting. I have said that if your business is growing and you feel like you need to hire somebody, that's okay. You don't have to do it for yourself. But then you still have to be involved with management accounting. And so in your workbook, you will see a table that compares these two. And financial accounting is involved in recording the transactions, right? Money comes in, we write it down where it came from. Money goes out, we write down the date and where it went. Financial accounting is then to classify those transactions. How much of that money that came in was from sales of this product or that product? How much of the money that came in was for this service or that service? And again, it's going to help us understand what customers are being attracted to, what need we are meeting. But we also want to classify the transactions as it relates to expenses. How much is being used on insurance? How much is being used on our inventory? How much is being used on transportation? How much is being paid in taxes? What are we doing about depreciation and so many other things? Financial accounting then goes to reconciling the records that we have. And so we say that we brought this much cash in. Do we actually have that amount of cash? Do we have the records that show that the cash that came in was actually deposited? And one of the things I think that's good about moving away from a cash system is that we tend to have a better trail, a record of where money is coming in. And so if you live in a country that does M-Pesa or mobile money, it's easier to see some of those transactions. And at the end of the month, you can say, yes, I had all of this income. I can see that it was all there. And I had this much in expenses, so therefore I should have this amount left. And if it doesn't reconcile, if it doesn't match up, you have to say, okay, where was the problem? What did we miss? And that is where doing things electronically is going to help you with that. Otherwise, you can have a good system where you're recording that. Then, of course, financial accounting is about summarizing those transactions. And so they are classified, they are summarizing them into what we will be talking about soon, which is an income statement or a balance sheet. And these summaries are really helpful for us at a management level to look and to see how things are going. And so the last thing for financial recording then is to present that financial data. And so now we move to the next side, which is the management accounting. And that is where you, as the manager, you get to compare the results against the goals. And the goals are usually expressed in your budget, your financial goals. But your budget comes out of the strategic planning and the goals that you set for economic, environmental, social, and missional. And that you need a strategy to fulfill that. That includes money. And so you get to see, this is what we had planned. This is what happened. What is it that we have to do? And so the next one then is you need to determine the reasons for the variance. Why did we go off? What was the reason? Was it just a one-time event? Maybe sometimes you can have an income statement. You had a lot more expenses in 1 month because there was an opportunity for you to buy a lot more inventory at a more affordable price. And so it looks like you're operating at a loss for that month, but it's not a bad thing because you were buying more inventory, and it means the next month you will have less of inventory as an expense and have a higher profit. And so you have to determine the reasons for that variance. Then, once you've determined the reasons, you have to identify the corrective action. And that's something that you, as the manager, as a steward before the Lord, you need to be involved in identifying that corrective action and not leave it to others to do that. You need to be at the helm of this. From there, you can then go back to the forecasting and the planning now for the next cycle. And what can we do different? What will we do different? What will that look like? And what do we expect our next month or our next quarter to show? And so you're analyzing the information. And so there's a big difference, as you can see, between financial accounting and management accounting. Maybe you're taking this right now and you are the person who is the manager, the owner of the business, and you're also doing the financial accounting. And that's good. It's very good practice. It's good to learn how to do that. Maybe you are working in a place where you have a bookkeeper, you have an accountant, and you're realizing that your management accounting skills need to continue to improve. And so wherever you are at in the cycle, you can be taking things away for how to be better invested in this, but it does take discipline and it takes commitment, and ultimately it takes a recognition that we are stewards before the Lord, and He requires us to be good stewards with what He has blessed us with. So thank you so much for your time. When we come back, we will go further into looking at the details of this, and at some point we will be doing some practicing as well. So thank you so much for your time. God bless you, and have a good day.